Hey, what's up, everybody? It is Mark with My Front Range Living, and we are back with Troy Reichert from the Reichert Mortgage Team. Thanks again, buddy, for joining us.
Appreciate you.
We are talking about mortgage questions and mortgage options, really, what's out there. So if you followed this series at all, you know that we talked about just some loan options for right now. You can check out here. Or we talked about loan buy downs last time, and you can check that out right here. So go check those out if you have the opportunity. But today we are talking about another thing that's really a buzzword right now when agents are out there listing homes, and that is assumable loans. So what is an assumable loan? What's a loan assumption? How does an assumable loan work? I'm so glad to tell you I don't have to know these things. I have a Troy, and Troy's going to answer those. So, buddy, what's an assumable loan?
Yeah, so I want to be very clear right up front. As a mortgage broker, I do not actually help out with the loan assumption or the assumable loan, okay?
Right.
The current lender for the seller is who you have to get approved through.
Right.
Okay? So, but I know enough to be dangerous, of course.
So wait a minute. So I'm going to have to qualify with the lender in hand, right?
That's correct.
Okay, so wow, it seems like it might be tough.
Well, I don't think so. Each lender is its own thing, its own animal, of course, right? So what I'm hearing out there is it can get done as quickly as a normal loan through me. It could take a little bit longer. It depends upon the individual lender that you're dealing with that the seller has currently.
Okay, so tell me how they work.
Yeah. So basically what happens, conventional loans have some assumable options, but normally a conventional loan is not assumable. Okay. FHA and VA loans are indeed assumable. It says so right in the paperwork that you sign when you're at closing. So how does it work? So the seller bought or refinanced, recently at we'll call it interest rate of 2.5, right? Rates were indeed in the twos on VA loans, right? I know, crazy. Last year for sure.
Yeah.
So what they're trying to do is they're trying to incentivize a buyer to assume their loan at the interest rate that they currently have in this 2.5 in this example, right? Okay. So what they can put it out there and say that, hey, you can have my 2.5% interest rate if you qualify. Okay. First and foremost, if you have a VA loan, I highly recommend that you have another veteran assume your loan, because if you don't, the entitlement that you have stays on that house, and it affects how you buy another house in the future. Okay. Gotcha. So that's super important. Now, let's say you do have a veteran and you're in a VA loan and they want to assume that loan. I'm just going to throw an example out there. You're selling your home for $500,000, okay, but you only owe $300,000 on that home.
That's great.
How do you make up the difference? Well, I've been searching the globe, and I'm sure there might be somebody out there, a lender out there, but I haven't found a lender that will make up that $200,000 gap. They might be able to make up some of it, okay? But by and large, you're going to have to bring in a hefty portion of cash to make up the difference between the purchase price and the amount that is owed on the current loan that the seller has.
So you're talking about a huge gap that's cash?
Potentially in that scenario, you might have to bring in $200,000 to make up the difference between $500,000 and $300,000.
Okay.
Yeah.
So tell me why a lender wouldn't loan on that gap there.
Yeah, of course. So think about this. The first lender in an assumption situation is the seller's current lender. They're going to be in the first lien position, right? They're the first money out when you sell the house. Okay. So a second lender would be in the second lien position. Now, it could happen, right? But that second lien position is definitely more vulnerable than the first lien. Sure. So let's say that someone forecloses or something like that. There's a chance where that second lien might not get paid off fully, right? The first lien is going to get paid off. Second lien has more risk.
Right.
So that's why they're not going to go all the way up to the purchase price in that scenario. They're not going to lend $200,000 necessarily, because they're at a riskier position being in the second lien position.
So it's almost like a second mortgage.
Yes, exactly. And again, I want to say that there is an opportunity for a second mortgage, but I haven't found one that goes all the way up to the purchase price.
Well, yeah, because you're back in the 7, 8, and 9 years when it was 110% lending, right?
That's right.
Yeah, that's dangerous.
Yeah, you don't want to go back to those worlds.
So it's important, it sounds like, to know what's your mortgage balance right now? Is that something that people can ask?
Yes, I think that, again, I don't know the rules within the real estate world, but I think that's a very, very common question that I'm hearing out there. So you love this house. You see that it's marketed, that it's assumable, and you want to go ahead and assume that 2.5 interest rate to have that lower payment, right? Yeah. So that would be the absolute first question I would ask. Okay, I already know what the purchase price is because it's out there. How much does the seller owe on that home? How are we going to make up the difference? And what I'm finding is at first they feel like it's a great option, but then when they find out they have to make up the difference in some form or fashion, they just have to move on from it.
That's a lot of cash, man.
It is a lot in that scenario.
Thinking about, 2020, 2021, early 2022, when those rates were down that far, the value increase year over year was pretty substantial. I mean, you could be looking at a 20% increase, and that's cash money down.
No doubt, no doubt. We saw that huge, upward climb on appreciations of homes, right? So you just got to look at each individual opportunity and see if it fits your needs.
Buddy, I appreciate you.
Yeah,
Thanks
of course.
again. For all three, man, thanks for being here, being part of the series. I learned a lot. That was really good stuff, and it keeps me out of hot water because you know as well as I do, I'm not supposed to be saying the stuff that you're allowed to say.
Let's stay in our lanes, right?
1,000%. Thank you so much for partnering up, buddy. I appreciate
it.
Hey, as always, we hope that you found value in today's content. Please head on down to the description. You are going to find some information on Troy, and you're going to find a link to his YouTube channel. So if you want to check out rates here in El Paso County and the surrounding area, that's a great resource for you. Also, in the description of the video is our relocation guide. So if you're thinking about moving to Colorado Springs or buying a home in Colorado Springs, hit that. That is yours, free, no obligation whatsoever. Just gives you a better idea, some different areas in town that may suit your criteria. Hey, as always, it would mean the world if you went down there and hit that thumbs up button, gave us a like on today's content. And it would mean even more if you went down, hit that bell, and subscribe to our channel. We are putting out content every single week to help you make Colorado Springs feel like home. Thanks so much for stopping by. We appreciate it. We look forward to seeing you soon. Have a great day.
Bye.